Chess went on Wednesday, September 5th, 2018 for MarketChess.com. It is MarketChess.com. Save it. Bookmark it. Pass it along. S&P 500 index daily time frame really doesn't look like there's much damage to the market, and frankly, there isn't. When we look at the S&P, looks like kind of a benign, orderly pullback. We knew we were a little extended perhaps last week into late August for the long holiday weekend. We're still above the prior all-time highs from late January this year. So nothing really to fret about, I would say, yet when it comes to the S&P. The small caps, nice bounce well off session lows, as denoted on the long skinny shadow at the bottom of today's daily chart candlestick, still above these moving averages. When we scroll over to the NASDAQ, there's really no damage yet either, still above these moving averages, all of them, but we're still above the breakout point from late August, a couple of weeks ago here. Nonetheless, clearly we saw some heavy selling in tech today. Bottom of the screen, the volume looked like market players really wanted to reduce tech exposure now that they're back, or a lot of market players are starting to come back to their desks after summer, after Labor Day holiday. The kids are back at school. So that's something of which to take note. I mean, you look over at Amazon, great run, but extended, came in today on volume. Square, PayPal, Netflix, Facebook has been soft. A bunch of these names here, a Grubhub, right? And I think a well-deserved reset here in the traditionally rough month of September makes some sense with respect to tech. And that begs the question, okay, fine. If these big market leaders are finally going to cool off a bit, and again, no one is calling a top, at least I'm not. No one's calling for a crash. I sure as heck am not. The issue then becomes, when you go through your logical progression, really, does capital, therefore, leave equities as an asset class as a whole? And then the whole market comes in. Are these names really that significant? We know Apple, of course, and Amazon have the monstrosities, the market cap, the trillion number, the T number. Be that as it may, are bulls willing to stay within equities and simply shift over sector rotation? That keeps the lifeline, the lifeblood of the bull going. And we know yesterday we profiled some banks, especially regional banks. They did reasonably well again today. There's also the industrials. Good close, XLI. I know the industrials are not a particularly sexy group, but you know what? There may not be anything sexy about trading in September anyway. It's, again, can be a rough month. So if we do see follow through there, this becomes a group to put in the work, and that's exactly what we do inside Market Chess Scripts and Services. So if you like what you hear in my videos and see my blog posts, I'd encourage you to sign up for a membership tonight at a reasonable price. No better way to kick off your autumn trading. We do go through in detail, in depth, many actionable ideas in these rotation sectors, other sectors as well. We go through actionable ideas there, plus educational content, intermarket analysis to boot, and my full videos. With your membership, you'll also get a private Twitter feed with text, email alerts in real time, updated watch lists, and my presence for you virtually around the clock. We have a great group of people. We welcome everyone. And frankly, we have everyone. Rookies, veterans, institutional, retail. I curate the private feed, of course, but again, great contributions for those who want to contribute. There's no pressure to do so. But my promise to you is I will give you a focused, disciplined atmosphere, a level-headed atmosphere. We always focus on risk. No noise, no ego, no nonsense like you see in so many other services and on social media in general. Thank you so much for watching, and have a great, great evening.